Okay, let's unpack this. Today, we're diving deep into something pretty important. The Social Security Cost of Living Adjustment, or ECOLA, for 2025. We're not just talking the number, but what it really means for your financial stability. Our mission, cut through the noise, figure out how this affects your bottom line, and importantly, how you can maximize your benefits and stay safe.
That's exactly right. It's more than just a percentage point. It's a vital mechanism designed to help your benefits, retirement, disability, survivor keep pace. Keep pace with the rising costs of, everything these days. Understanding the details is really key for you, especially after all the financial shifts we've seen lately.
Okay, so what's the forecast? What are we looking at for 2025? The number everyone wants to know. Obviously, it's not official yet. That comes later. But groups like the Senior Citizens League, they're respected, nonpartisan. They're projecting, somewhere between 2.6% and 3.2%.
Yeah, that's the range they're putting out there, 2.6 to 3.2%. It definitely signals things are cooling down compared to that huge 8.7% bump in 2023, and even the 3.2% for 2024. So moderation seems to be the trend.
Right. And the official announcement from the Social Security Administration, that lands mid-October, correct?
What?
After they get the September inflation numbers.
Exactly. Mid-October is when we'll know for sure.
Yeah.
And then you, the listener, you'll get your own personalized notice, usually by mail in December. Or you can often see it even sooner if you check online through your My Social Security account.
Okay, let's talk about how they get that number, because it's not like they just pick one.
No,
Yeah.
definitely not. And this is kind of fascinating. It's not a raise in the typical sense. It's purely an inflation protection thing, tied directly to the Consumer Price Index, the CPI.
But specifically the CPIW, the one for urban wage earners.
Precisely. The CPIW, which tracks spending for urban wage earners and clerical workers. And that brings up a really important question for folks on Social Security. Does that index truly capture your spending patterns as a retiree?
Especially with things like healthcare, which can be a much bigger chunk of expenses later in life.
Exactly. Healthcare, housing, things that might weigh differently for seniors. That's why there's this ongoing discussion, this debate about maybe using the CPIE instead. It's an experimental index. The E is for elderly, and it gives more weight to those kinds of costs.
Interesting. So the choice of index really matters.
It absolutely does. And another quirk, they only use the inflation data from the third quarter, July, August, September.
So it's always looking backward a bit, a lagging indicator.
Yeah, exactly. It reflects inflation that's already happened by the time the calculation is done. If inflation changes quickly after September, the CLA won't reflect that immediately.
Okay, so we've got the projections, the calculation method. Who actually gets this increase? Does it apply to everyone receiving benefits?
Good question. The good news is, yes, it's pretty broad. It applies across retirement benefits, spousal benefits, survivor benefits, and disability benefits too.
What about SSI, supplemental security income?
Yes, SSI recipients also get the CLA, but there's a slight timing difference for them. Because January 1st is a holiday, their adjusted payment usually shows up right around December 31st. For most other Social Security beneficiaries, though, you'll see that new, higher amount in your January 2025 payment. The exact date depends on your birthday.
All right, so let's make it real. Someone hears, say, 3.0%. How do they figure out what that means in actual dollars for their check?
It's actually pretty straightforward math. You just take your current gross monthly benefit amount before any deductions like Medicare premiums and multiply it by the CLA percentage.
So using that example, if you get $1,900 now and the CLA is 3.0%.
Right, so $1,900 times 0.03, that's an extra $57 a month. Your new gross benefit would be $1,957. Oh, and one small detail. The SSA always rounds the final amount down to the next lowest whole dollar. Just a heads up.
$57. Okay. But here's something I think is huge, this sort of aha moment. The multiplier effect based on when you claim retirement. Can you explain that?
Yes. This is crucial for long-term planning because the COLA is a percentage increase. A higher starting benefit means a bigger dollar increase each year. It compounds.
So let's use your Jane example. Full retirement age benefit is $2,500.
Right. If Jane claims early, at 62, her benefit is reduced, say, to $750. But if she waits until age 70, she gets delayed retirement credits, boosting it to maybe $3,100.
Okay, now apply that 3% RLA.
For early claiming Jane, 3% of $750 is $52.50 extra per month. For late claiming Jane, 3% of $3,100 is $93 extra per month.
Wow, that's a $40 difference every month in just the first year's CLA.
Exactly. And that gap just grows bigger and bigger every single year there's a CLA. Over decades, it adds up to a substantial amount.
Of course, the flip side is needing the money earlier. Delaying isn't always an option.
Absolutely. It's a very personal decision. Weighing immediate needs against that larger future income stream. Health, other savings, it all plays a part for you.
Okay, something else that COLA impacts, taxes. How does that work?
Yes. The tax implications. This is where it can get a bit tricky. The COLA increase itself can sometimes push your total income over certain thresholds. Thresholds where your Social Security benefits start becoming federally taxable.
And those thresholds, they haven't changed in ages, right?
That's the key issue. They've been fixed since 1983. They aren't indexed for inflation themselves. So as benefits rise with CLAs, more of your income might cross those lines. It's called bracket creep sometimes, or a stealth tax.
So what are those thresholds, roughly?
For an individual, if your provisional income, that's a specific calculation, including half your Social Security plus other income, goes over $34,000. Up to 85% of your Social Security benefits, it could be subject to federal income tax. For married couples filing jointly, that threshold is $44,000.
Okay, so that's definitely something for you to be aware of. The CLA is great, but check the tax impact. Now, shifting gears slightly, security. CLA time seems like prime time for scammers.
Unfortunately, yes. Very much so. Scammers love these moments of change or expectation. They might call, text, email, pretending to be from the Social Security Administration.
What kind of lies do they tell?
Oh, things like, we need your bank account number to deposit your COLA, or there's a problem with your increase, give us your Social Security number to fix it.
Yeah.
Or they might threaten you, say your benefits will be cut off if you don't pay some fee.
So the absolute key takeaways for safety.
Number one, the SSA will never randomly call, text, or email asking for your Social Security number, bank info, or credit card number, period. They will never threaten you. And they will never demand payment via gift cards, wire transfers, prepaid debit cards, or cryptocurrency. Those are huge red flags. If you get a call like that, just hang up.
So be super skeptical of unsolicited contact.
Extremely. Your best defense really is knowing how the SSA actually communicates and using their official channels.
Which brings us back to the My Social Security account online.
Exactly. SSA.gov My Account. It's free. It's secure. That's the fastest, safest way for you to see your official COLA notice when it's ready, check your earnings record, manage your direct deposit, basically stay in control.
So we've covered a lot. It's clear the CLA number, while seemingly simple, has layers. The calculation, who qualifies, the impact of when you claim, taxes, security. It's more complex than just a percentage.
Absolutely. For you listening, the key is thinking about how this annual adjustment fits into your whole picture. Not just the monthly check, but your overall retirement strategy, your tax situation, and definitely staying alert to those scams.
So what's the one thing that really stands out to you from all this? As you think about your own situation, how can understanding these details, the CPI debate, the claiming age impact, the tax thresholds, truly empower you to, maximize what you receive and just navigate things confidently? Something to think about.